Most traders assume what happens at the desk stays at the desk, that the emotional work of trading is contained within the session, the entries, the stops, the discipline in the moment. Get those right, the thinking goes, and the performance follows. But here's what that framing misses. The trader sitting down at the charts every morning isn't starting fresh. They're arriving with everything they carried in. The argument from last night, the financial worry that woke them up at 3 a.m., the third consecutive week of poor sleep, the body that hasn't moved properly in days, the relationship that's falling apart in the background, or they're trying to focus on price action. None of that announces itself when the platform opens. It doesn't appear in the pre-session checklist. It doesn't show up in the trade log. But it shows up in the decisions, in the hesitation on a valid entry, in the oversized position taken from a place of financial desperation, in the session abandoned halfway through because the emotional tank was empty before the first candle closed. What you do and how you live outside of trading is not separate from your trading. It's the foundation your trading is built on. And today we're going into exactly how the specific ways that life outside of trading bleeds into your decision-making, and what it looks like to manage yourself as the instrument your trading runs on. The idea that you can separate what's happening in your personal life from what happens at the trading desk is one of the most persistent and expensive myths in retail trading. It's not that traders don't try. Most serious traders work hard to compartmentalize, to leave personal problems outside the session, to show up focused, to not let external circumstances affect internal decision-making. The problem is that compartmentalization doesn't work the way we think it does. The brain doesn't have a trading mode and a life mode that can be switched cleanly between. It has one operating system, and that system is running the whole time. The stress from a difficult relationship doesn't pause when the platform opens. The cortisol from a sleepless night doesn't drop the moment you sit at the charts. The cognitive bandwidth consumed by a financial worry doesn't free itself up because you've decided it's time to trade. What actually happens is subtler and more insidious. The emotional load from outside trading doesn't prevent you from making decisions. It degrades the quality of them, in ways that are often invisible until the trade log is reviewed honestly at the end of a difficult week. The patience gets shorter. The risk tolerance shifts in ways that track the emotional state rather than the market conditions. The ability to sit through normal drawdown without intervening emotionally gets reduced, because the emotional resource that makes sitting possible has already been partially consumed by whatever is happening outside the charts. In other words, your life is your edge condition. If the life is right, the sleep, the physical health, the emotional stability, the financial situation outside the account, the edge expresses itself cleanly. When life is compromised, the edge gets expressed through a compromised instrument. And a compromised instrument produces compromised results, regardless of how sound the strategy is. Let's get specific about the different ways life outside trading shows up at the desk, because each one has a distinct mechanism, and understanding the mechanism is what makes it possible to actually address, rather than just acknowledge. The first and most immediately impactful is relationship stress. A difficult conversation the night before, a relationship in conflict, a breakup in progress. These are not background events that the brain processes quietly while you focus on something else. They are active, resource-consuming concerns that the brain continues working on regardless of what you've decided to focus your attention on. The psychological term is attentional residue, the cognitive load left behind by an unresolved emotional situation that keeps pulling at the brain's attention even when you're consciously directing it elsewhere. At the trading desk, attentional residue looks something like this. A trader whose mind keeps drifting, who reviews the same level 3 times without actually registering it, who enters a trade and realizes midway through that they can't quite reconstruct their reasoning for it. The analysis is happening, but it's competing with something else for the brain's processing resources. And in a domain that requires full cognitive engagement, partial engagement produces partial results. The second is financial stress from outside the account. This one deserves its own discussion because the way it affects trading is particularly specific and particularly damaging. When a trader is under genuine financial pressure, bills that need paying, savings that are running low, income that isn't sufficient, they arrive at the trading platform carrying a need. Not just a desire for profits, a need. And trading from a place of financial need fundamentally changes the risk-reward calculus, because the potential loss isn't being evaluated against a trading plan anymore. It's being evaluated against a financial situation that requires a specific outcome. That need produces greed, where the brain's reward system becomes laser-focused on the financial outcome and starts overriding the risk management system that would normally constrain it. The position size is up. The stop gets stretched. The criteria get bent. Not because the trader isn't aware of their rules, but because the rules were built for a neutral financial state and are being applied in a pressurized one. The third is the chronic depletion of an unhealthy lifestyle. Poor sleep, poor nutrition, physical inactivity. These aren't just wellness concerns. They are direct inputs into the quality of the brain that shows up at the charts. We covered sleep specifically in the consistency video. Even mild sleep insufficiency degrades prefrontal cortex function, which is the exact cognitive capacity that trading most depends on. Poor nutrition produces energy instability that maps onto attention instability. Physical inactivity allows stress hormones to accumulate without the physiological processing that exercise provides. A trader who is chronically depleted in these ways isn't just slightly off their best. They are operating with a consistently compromised cognitive baseline, and the trading results will reflect that consistency whether they connect the dots or not. Of the three, financial stress is the most dangerous, simply because the main reason we've got into trading was to make money. Every serious trading mentor will tell you not to trade money you can't afford to lose. The reason isn't just about risk capital. It's about the psychological state that trading with needed money creates. When the money in the account is money that has somewhere else it needs to be, rent, bills, a savings threshold you're trying not to fall below, every trade carries a heavy weight that will make you act emotionally. The loss isn't just a percentage of the account. It's a delay on something real, something the financial stress has already made urgent. This stress forces you to over-leverage your positions in hopes of a quick financial recovery. It pushes you to widen your stops beyond what the chart justifies, running from the emotional sting of a loss your bank account can't handle. It tricks you into forcing subpar setups because financial anxiety imposes an artificial deadline that leaves absolutely no room for patience. None of these decisions feel like greed in the moment. They feel like reasonable adaptations to a difficult situation. They feel like doing what needs to be done. That's what makes this trap so hard to recognize from the inside. The financial pressure creates a logic that overrides the trading logic. And the financial logic always has a compelling argument for why the next trade needs to be bigger, held longer, taken sooner. The only way to protect against it is to be honest, before the session opens, about whether the financial state you're in is compatible with the emotionally neutral decision-making that good trading requires. And if the honest answer is no, we must have the discipline to sit that session out, the same way an athlete sits out a game they're not fit to play. If your life outside trading is your edge condition, then managing your life outside trading is part of your trading practice, not adjacent to it, part of it. That means treating several non-trading activities with the same seriousness that most traders reserve only for strategy and risk management. The first is sleep, and this one is non-negotiable. 7 to 9 hours consistently is not a wellness recommendation, it is a performance prerequisite. A trader who is chronically underslept is trading with a structurally impaired prefrontal cortex every session. There's no workaround for this. Caffeine masks the impairment, it doesn't address it. The only variable that restores prefrontal cortex function fully is actual sleep. If the life circumstances making sleep difficult are within your control, screen time, schedule, environment, they deserve to be addressed as seriously as any trading problem, because they are producing trading problems whether or not that connection is visible. The second is physical movement. Exercise is one of the most effective cortisol management tools available, and cortisol, as we covered in the Losing Streak video, is the chemical most directly responsible for the degraded decision-making that difficult trading days produce. A trader who exercises regularly is not just healthier, they are chemically better equipped for the emotional demands of live trading. The discipline of maintaining a physical practice also reinforces the broader habit of showing up consistently even when the immediate motivation isn't there, which is exactly the habit that keeps trading performance stable across difficult periods. The third is honest emotional triage before each session. 5 minutes, no charts, just a genuine assessment of where you actually are right now. Not where you want to be, where you are. Is there anything from the last 24 hours that's still actively occupying mental bandwidth? A conversation that didn't resolve? A financial concern that's been sitting in the background? A relationship tension that hasn't been addressed? If the honest answer is yes, that's information about the quality of the instrument that's about to sit down at the charts. Sometimes the most professional decision is to delay the session until the emotional loading has reduced. Sometimes it's to trade with a deliberately more conservative position size, acknowledging that the decision-making capacity is operating below its normal level. But the worst decision, the one that costs the most consistently, is to pretend the loading isn't there and trade as though it isn't affecting anything. Fourth, you must strictly separate your trading account from your everyday financial needs. If you're counting on your trading balance to pay for immediate living expenses, you need to handle that crisis outside the markets first. Trading under the gun of financial survival completely warps what a trade means to you, which inevitably warps your decision-making. Sorting out your basic finances isn't a distraction from trading. It is a critical trading performance intervention. The charts don't care what's happening in your life. The market doesn't adjust to account for a difficult week, a stressful relationship, a financial situation that's making every loss feel personal. It just moves. And the decisions you make in front of it reflect everything you brought to that desk. Not just your strategy, not just your discipline, but your sleep, your health, your emotional state, and the weight of everything that was already on your mind when the session started. What you do and how you live outside of trading will always show up in your trading. Not sometimes. Not just when things get really bad. Always. The only question is whether it shows up as a positive foundation. A well-rested, physically healthy, emotionally stable person with the cognitive resources to execute their strategy clearly. Or as a liability that the strategy has to fight against before the first trade is even placed. You are the instrument your trading runs on, and instruments need maintenance. Not as an afterthought, not when things get bad enough that it's impossible to ignore. As a regular, deliberate, ongoing practice that is treated with the same seriousness as the strategy it's supposed to express. Take care of the person who trades. Everything else follows from that.